think it probably outperforms because it is a very, very early stage. But my God, there's the amount of development activity, the amount of GitHub lines of code that being created, the applications layer, even things like the phone, this Steppen, and these all don't have to work. I'm not saying they're all amazing things and they'll all survive, but the amount of stuff going on, even what's been happening in the DeGods NFTs this week in Solana NFTs are a big deal. So there's a lot going on there. And there's not any other chain that has that level of activity outside of ETH. The one behind it is probably Polkadot. But Polkadot has less end user. There seems to be a lot of development, but it doesn't have the value being exchanged on chain yet. But maybe because there's more complexity. And Avalanche is seeing a lot, but it's not at the level of Solana in any way, shape, or form yet. But maybe it gets that because of their multiple different the kind of subnets. So maybe they get more network effects. I don't really know.
Hello and welcome to Money Talks. In today's video, Real Vision CEO, macro expert, and former Goldman Sachs hedge fund manager Raoul updates about Bitcoin, Ethereum, Solana, and other cryptocurrencies. Raoul also shares his perspective on DeFi, NFTs, and the future of social tokens, as well as his thoughts on Bitcoin's institutional adoption. Make sure to stick around till the end of this video where Raoul explains the key reasons why crypto investment can be a life-changing opportunity if done right.
First order thinking is recession bad. The actual thinking is, if there were to be a recession for 3 years, what are the central banks doing? Right? Because that's unemployment rising for 3 years and inflation falling for 3 years. What would the central banks be doing? They would be trying to stimulate as much as possible, because we have not had a 4-year recession in, as long as, I think, not even the 30s. I don't think it was that long. So, but let's assume it's the 1930s again. That is incredibly positive crypto, because there's a massive debasement of currency having to happen to try and protect the world falling apart because of the debt burden. So, again, it's not about are we in recession? It is what is the outcome as growth slows? What happens to liquidity on a forward-looking basis?
The most recent unexpected Bitcoin pump launched the first cryptocurrency back in the bullish range for the market, but it was not random and there were many signs suggesting the upcoming bounce. The same signs now project a continuation of the rally. The negative funding of open interest and Bitcoin futures backwardation were the two main reasons that caused such a volatile price spike of the first cryptocurrency. Both factors were showing how extremely oversold Bitcoin derivatives were.
Look at what happened in 2008. What really turned it around was eventually the fiscal stimulus combined with debasement of currency via quantitative easing. And then every time they pull the quantitative easing trigger again, it had the same effect. It has it every time. Now, they're going to be a little gun shy right now because inflation is very high. But again, market's job is to look at probabilistic outcomes in the future, not where we are today. If you look at the world where we are today, you will lose money always. I do not see big tech using Bitcoin except as a method of payment, like PayPal will accept Bitcoin. Because there's not much that can be built on the Bitcoin layer, on Bitcoin itself. So you have to use the Lightning layer, and that's really for a payment system. So payments is probably the only thing, and I think they will accept it because it's a global form of money. Now, it's not the kind of money you want to spend a lot. You'd rather hoard it because over time it goes up. But as it gets broader with adoption, then yes, it can use as a payment system. But it's an instant way of transferring value. Lightning Network's proven itself to be super fast way of me sending you $1 over Bitcoin rails. So I think that's really where big tech will adopt it. And I think the probability of that is about 100%. Yeah. It's already coming.
With the appearance of buying power, we saw a light short squeeze that caused the spike above $21,000 in just a day. Coinbase is one of the biggest Bitcoin trading platforms in the world, and it usually reflects the intentions of retail traders around the industry. Recently, we saw a successful test of demand in the platform's order book, according to Will Clement. With the compositions of orders leaning toward bids, we can firmly say that the market is leaning toward recovery. The same goes for the funding rates as bears use to pay bulls for opening short orders.
I don't know everything. Far from it. There's a load of things I'll be dead wrong on. Some things I'll miss entirely. It's not my job. My job is to set everybody in the right course and let's figure out. That's why I speak to people like Yatsui about what he's seeing, or I just got off the phone with John Wu from Avalanche, and I spoke to Anatoly from Solana, and I'm so privileged in getting to speak to people. And if I can share my learning as I'm chatting to these people saying, hey, what the fuck's going on in your ecosystem? How does this work? How are you seeing network adoption? How are you thinking about the future? What opportunities are you seeing? And everyone can watch over my shoulder. Then we all go together. And then the Ask Me Anythings are a way of us being able to chat about it.
Right.
That's the joy of this thing. And as you said with the railroad, with the oil stocks, and it was the same with the railroad stocks, these were really important networks that got built.
Yeah.
Tons of stuff failed. There was tons of excess speculation. The United States would not be the United States without the railroad network or the oil network or the phone networks. So this is how big these things are. And let's figure out where the main opportunities may lie, because this one, unlike those, the average person can participate in on a pretty much equal footing because you're part of the network by owning a token. The way that I form an opinion, and everybody should, is you listen to a lot of broad-based opinions. Sure, you can take the crackpots off from either side, but listen to a broad base of opinions. Like there's some really interesting opinions on why the ETH merge might be a mistake. You don't ignore them. You take them on board. And then you weight them yourself. How important is that to me? Not sure. Very important. This is terrifying. I don't really care. That's okay. But having people's opposite opinions, differences, nuances, it's really important with the macro scenario. Just because I tell you what I think doesn't mean I'm right. But once you listen to a bunch of people, you can start formulating your own opinion, saying, this is what makes the most sense versus what I'm seeing and thinking. And therefore, I can have these set of outcomes and actions.
In the last few months, the dominance of the first cryptocurrency on the market was gradually decreasing as investors have not seen any reasons to provide inflows to Bitcoin, while Ethereum provides more intrinsic value than the digital gold. But with the update going live in just a few days and Bitcoin reaching the historical bottom of the range, it is most likely a sign of a dominance reversal that will either bring us a BTC rally or a widespread correction on the altcoin market. So, what do you think about social tokens? Are they worth investing or not? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.